what's really shifted in the last 10 years is central banks are now openly buying gold. And as I touched on before, that's because the counterparty risk of owning the government bonds that previously were the norm has gone up, plus the inflation risk on those bonds has gone up. So you go and buy 10 years worth of US dollar debt, you know that when you get it back at the end of 10 years, even with the yield that you've been paid, the real rate of inflation has not suppressed, that's the wrong word. The real rate of inflation has eroded the purchasing power of that debt contract. Like, why would you own a negative yielding debt product? That doesn't make sense. So they're turning to gold. And now I want to shout out to James Lavish, his most recent newsletter with the information is absolutely excellent as always. Being able to read the insights of an active fund manager with lots of experience into Bitcoin as well. I mean, it's gold dust, this stuff. So 1,000 tons annually for 3 years has been picked up by central banks. Like, who's buying? Well, it's not a secret, this, but the BRICS nations, right? The Chinese, the Russians, the Indians. They're not interested in US government bonds any longer. What happens if they get sanctioned? Why would they go and buy them, right? And from reports that are actually visible, so the National Bank of Poland has added 49 tons in Q1 of 2025. China's central bank has been purchasing since November 2024, and they've paused for 6 months just prior to that. They've added another 13 tons in Q1 of 2025. The Turkish, Azerbaijan, Kazakhstan, Czech Republic, Cambodia, the Philippines, they're all buying gold openly. But here's the kicker, right? According to the data James is posting, only 22% of actual central bank demand is seen on the market. So that means 80% of gold purchases are being done through back channels that we have no idea about, right? A lot of this is apparently conducted through Switzerland, and they don't declare it. Why wouldn't you declare that you own more gold? Well, one, it's a safe haven asset that they are stashing for a rainy day. We want to retain our purchasing power. Having money that functions in the future as a store of value is important to us. We want to own that. But two, it's also recognition of the fact that their currencies are failing. Now, no one really wants to admit that, right? Oh, yeah, no, I'm not buying gold. No, nothing to see here. Why? Oh, because I believe in the fiat currency that I produce every day. So this is fascinating to me. Okay, these are genuine mechanics of the market that are shifting on like decade-long time horizons and now speeding up. And important to point out is that the gold price bid is from people allocating from a strategic perspective. They are price insensitive. So they are buying what they can in order to hit whatever quota they might have given.